What a pretty place. The conservatory, not the music one, the plant one, unfortunately closed due to emergency maintenance. Looks like everything in Melbourne is emergency maintenance, whether it's a conservatory, dock that's sinking in docklands, where business is closed. The list goes on, but this is far from the maddening crowds. Now today I'd like to talk about economic stimulus. You like that? Economic stimulus, as if the economy is some humanoid structure and you kick it and it reacts. And there are a number of terms you need to remember in this little presentation. Things like helicopter money. You know what helicopter money is? It's when the government gives you money to spend to stimulate the economy. Things like, assisting small business. Now the Australian economy has a problem. Not just because of the bushfires, not just because of the potential of the coronavirus will cause some dislocation, but because we put all our eggs in one basket, and that's the Chinese basket. And as we are not a manufacturing country, we've closed down most of our manufacturing over the last few decades, and we rely on farm exports and mining exports to keep the country ticking over, and internal consumption, we have a problem. So the economy is sluggish, and I want to stimulate it. You can do it a number of ways. You can do what the Reserve Bank keeps doing, is dropping the interest rates. But who wants to borrow money in the current economic situation and start a new business? Doesn't matter how low the interest rates are, and the stock markets have said pooh-pooh to this. Then you can do what's called quantitative easing. You can buy treasury bonds. The government buys its own treasury bonds and puts money into the market to stimulate the economy, which means that the banks get more money to lend to people like you and me. And we then open up businesses and employ people. Ha ha ha. And then if all else fails, there's helicopter money. And they pour money, they give you $2 or $3 grand to go out there and spend to stimulate the economy. Now I've got an idea which will stimulate the economy permanently. It's like having a permanent orgasm, alright? An economic orgasm. And it's not a matter of revolution or blood in the streets or cutting off people's heads. It's a simple problem which can be resolved by a majority vote in every state and territory government and some assistance from the federal government. And I can assure you I can stimulate the economy to such an extent that we'll have no problems. Well, I won't have problems, but obviously investors may have problems. The only people who are going to have problems if we stimulate the economy the way I want to see it stimulated, and it does work, is that 8% of Australians who have disposable income to be involved in investments, whether it's through the stock market or through, and I'm not talking about superannuation, through the stock market or through property and negative gearing, and that 1% of Australians that owns the means of production, distribution, exchange, communication. They will not be happy with this stimulation. And that's why you may not see it being put up in the Houses of Parliament. It was quite interesting. I was an invited speaker of a homeless meeting in Wonthaggi on the weekend, or a little short time ago, and I raised this idea in terms of housing, and there was an ex-minister there from the previous Kane government, not very impressed with quarantining money, but that's another story which I'll talk about one day. So how do we stimulate the economy? Helicopter money? No. Quantitative easing? No. Negative interest rates? No. It's very simple. Every state and territory in this country levies stamp duty. They levy a stamp duty on when you buy a home. There is no way you are going to get into that house without paying your stamp duty up front. And stamp duty can run between 4 and 6%. In Victoria, which is the state I live in, which I'm familiar with, they raised $6 billion in stamp duty last year. Now every state and territory raises money through stamp duty. Obviously in New South Wales it'll be about the same or a bit higher because property prices are high, lower in Queensland. In Tasmania, stamp duty revenue is rising. Now, state governments levy stamp duty revenue. It is not a federal tax, it's a state government tax. Now, if the federal government wants to stimulate the economy, why doesn't it recompense the state governments and territories if they quarantine stamp duty revenue, which is stamp duty revenue for homes, which is the tax which is raised on you buying a home, buying and selling of homes? Why don't you quarantine that money for public housing? Whoa, I hear you say. That's a bit radical. Well, in a capitalist society and in a communist society, the best way for things to function is to have a mixed economy. So you've got a private sector and a public sector. In a communist society, everything is regulated by the state. In a capitalist society, everything is regulated and controlled by the private sector. When you have public and private competing in the same marketplace, there is real competition. And what happens when there's real competition? Prices drop. So, if you quarantine stamp duty revenue that is raised from buying a new home, quarantine it for public housing, what happens? Well, the first thing that happens is that all those homeless people you've been walking over in the street and guiltily passing and not giving any money to will not be there. You can house them in public housing within a month, and you don't need to go on some building splurge. You can spot purchase around the country. Regional areas, CBD, inner suburbs, outer suburbs, rural areas. Everybody on the public waiting list would be gone within a year. That's right, within a year. And within a decade, 20% of Australians will be living in public housing. So how does that stimulate the economy? Not only does it provide secure accommodation for an increasing number of people who are having huge issues affording accommodation in a capitalist economy where there is no competition with the public sector as far as public housing is concerned. What it does is it does a number of things. The first thing it does, it actually puts downward pressure on rents, which is a fancy way of saying is rents will drop. If people can live in a public unit or a public house and pay 25% of their income for that privilege and have secure long-term housing for 25% of their income, and I've had some patients who've lived in public housing for over 40 years. Same home, same suburb, kids have gone there to school, they've formed their links with their local community, they're involved in the local clubs in that area, secure accommodation, 25% of their income. If they're on a pension, 25% of their pension. So what happens is that you put downward pressure on rents because fewer people would want to rent privately. So rents will fall as investors who dominate the rental market, investors scramble to get a return on their investment. As rents fall, some investors will leave the property market, especially at the lower end, and maybe, invest their money in the stock market. And as rents fall, housing prices at the lower end fall. As housing prices at the lower end fall, more people will actually be able to enter the property market because they'll be able to afford an entry-level home. Instead of paying $1 million, they maybe have a mortgage on a $300,000 or $400,000, over the next 20 or 30 years. So, by having a strong public housing sector, you decrease rents, you decrease property prices, which investors don't like at all, you increase security, you improve law and order, you decrease all the social issues which occur when housing affordability is an issue. Today, in Australia, then you say to me, but Joe, how does that stimulate the economy? Today in Australia, most Australians are either renting or paying off a mortgage. 40% rent, 40% are paying off a mortgage, and 20%, a great majority, elderly, who've paid off a mortgage all their life, own their own homes. And obviously the investor class, they own lots of houses because of the negative gearing laws, which gives them a tax advantage if you buy more than one home. So what happens? If you're paying 30, 40, 50, 60% of your income every week to keep a roof over your head, there's not much money left over once you buy your food, look after your kids, buy a few little bits and pieces. There's not much money left over because most of it is going into housing, which is a negative way of running an economy. Now, if rents are fixed at 25% in the public housing sector, what it means is that more people have disposable income, which is a fancy word for saying people can use that money which they saved on rent or mortgage repayments to stimulate the economy. So people can go to their hairdresser, get their fancy hairstyle. Never been to a hairdresser in 50 years, you may have noticed that. They can buy that takeaway they've been thinking about for the last 10 years, and the list goes on and on. So you increase people's buying power. It's a simple idea. As I said, it doesn't require blood in the streets. It doesn't require a bloody revolution. It doesn't require the guillotine coming back, putting it up there on Capitol Hill or Canberra. It doesn't require any of that garbage. It's a simple legislative process. In Victoria, there are 88 members of the Legislative Assembly and 40 members of the Council. If a majority passes the legislation to quarantine stamp duty revenue from housing into public housing, hey bingo, you stimulate the economy. Not stimulating the economy for 2 or 3 months, but stimulating the economy long term, for years, possibly decades. Because in a capitalist society, the economy needs people to consume. We have forgotten that in Australia. We have forgotten that 65 to 70% of every transaction which occurs in this country, as far as the economy is concerned, is based on internal consumption. People buying homes and cars and food and clothes, entertainment, overseas holidays. It's not based on exports. It is not based on exports. Exports assist, but that is not the basis of the economy. So to stimulate the internal economy, you either have wage rises across the board for everybody, which is very difficult to bring into a period where trade unions have been legislated out of existence, or you stimulate the economy by increasing people's buying power. And one very effective way to increase people's buying power long term is through extending the public housing sector, and one way to pay for it is by quarantining stamp duty revenue, which is raised when people buy a home, for public housing. So you solve a lot of issues, you improve life for a lot of people, you improve security for the community, you improve life for small business, and even major corporations as spending power increases. Now when the Reserve Bank lowers interest rates by 0.25% and they want us to race out there in spending, well, if you haven't got a mortgage, it has no impact on you, and 60% of Australians don't have a mortgage. And if you're retired and you've been relying on interest rates to fund your retirement through your superannuation funds, well, there's no interest. I mean, soon we'll have the banks charging us for the privilege of holding money in their bank. So it's a simple idea. It requires a majority in both houses of Parliament, in every state. In Queensland it's even simpler. There isn't an upper house, it just requires a majority in the Queensland Parliament. And then the federal government can actually allocate federal money to the state governments for the income they have lost by diverting stamp duty revenue for housing into public housing. So it would need some federal-state competition. Now it's a little bit funny, isn't it? Here I am, a radical. Well, I consider myself to be a radical. You may think I'm a, raving conservative. Actually telling the government of the day at the state and federal level what they can actually do to stimulate the economy long term. because it's all about consumption in a capitalist society, and it's all about having the resources to purchase the goods and the services which are produced in this country. And if you're wasting most of your money on rent and mortgage repayments, there's nothing left over to assist small business in this country. Next week, who knows what erudite subject I'll talk about? Maybe even the coronavirus. Who knows?